Welcome back to the Dear Global Leader podcast. And I'm super excited today. We have a new guest. This is Larissa Garcia. You have a career at the intersection between investing, diplomacy, and global leadership. So it's really, really interesting. And today we will discuss more the leadership skills of investment, but also global portfolio. What I found really interesting about you is that you started your career in telecom and then you moved to real estate and then VC and then angel investing, but also you have the honorary to be a honorary consul of Republican Dominic Republican in Denmark. So it's like give you fantastic lenses on geopolitical views and maybe it impact your leadership views. So I think we'll discuss all that today and we'll have like about an hour in front of us. And the part one will be more about looking into these investment skills that you have developed across the years. Usually I ask the guests, what is the pivot that brought you where you are? But there is that many pivots that I would love that you just explain. How did you go from telecom to real estate to investment?
Yeah, well, thank you, Tiffany, for inviting me over for this chat. I've been looking forward to it for some time now. Well, you call it pivot. I actually see it as actually quite sort of a normal sort of evolution in my
Mm-hmm.
life. I mean, you can say I started my career in corporate. And it turns out to be many years in telecoms. Most of my corporate years were in telecommunication companies, both back in the Dominican Republic and England, where I lived for a while, and also in Denmark.
Mm-hmm.
And my last corporate job was actually at the train authorities in Denmark, and that's where I really learned the language and the culture, I can tell you.
Yeah.
And then at some point, through an exit in the family business, then we came with some working capital that had to be allocated. And then I come from a family that invests in property, so it was somehow natural for me to
Mm-hmm.
to get into that. But also, it's when you're. I mean, I started looking at how to preserve the wealth that we have created through this exit of this family company, and then it's sort of it's a good base to have an investment in property, and then
Mm-hmm.
move on to the more riskier type of assets like the other things I've
Mm-hmm.
also invested in. So you would say that that for me, I have been learning the skills. I've gone from the very predictable corporate
Mm-hmm.
organization structure, hierarchy, and so on, to the to the wild west
Yeah.
of startups,
Startups.
where you don't have any data. You meet people, and then you make decisions based on that, and then the next is how you support these startups to live up to their dreams, you can say. So yeah, that's also part of this what you call transition story.
Yeah, yeah, yeah. And I know that the first time we met, you told me that actually that you don't feel that this is a transition, but I think for a lot of listener, they will be more on the corporate side. So it feels like VC angel investor, it feels like so far away. And this is why also I wanted you on the podcast because I think there's a lot of bridge that can be made because you learn the core skills in the corporate and maybe we can extract your advices and replicate it in other world. And one of my first question would be also, what is your, maybe you don't have to give the secrets and so on, but just like, do you have some patterns or KPIs that you look for when you do this investment that we could reuse also in the corporate side? Like, what are you looking for when you look for an opportunity to invest?
Yeah, but I would also say I the greatest school, obviously after university, is corporate, right?
Mm-hmm.
And when I started my investment part of my career, then it was about not having the structure I was used to have.
Okay.
So I don't know everything, obviously. So I started finding my allies, you can say, some
Mm-hmm.
advisors that could help me on the legal side, on the more technical financial
Mm-hmm.
side, and in that way, I also started learning the tricks of the trade, you can say.
Mm-hmm.
And then I bought the services or the advice to protect and mitigate the risk, because investment is also
Mm-hmm.
about that. You take risks to make a
Yeah.
profit, but as an investor, you need to look at ways of mitigating the risk. So, like you would do in corporate, I mean, you look at an issue, a problem, a project, a goal that you've been set,
Mm-hmm.
and then you start looking, okay, what resources do I have in hand?
Mm-hmm.
And resources is money, is people, is processes and stuff. So you start allocating those resources and start monitoring. You set the goals, and then you start working. And that is the same in investment. It's just more, you can say, more focused, because you're putting your own money, you're putting
Yeah.
your own beliefs. You don't have a steering committee
Mm-hmm.
overseeing you.
Mm-hmm.
I could have that. I actually have sort of a, you can say, a ghost advisory board, people that I
Mm-hmm.
consult on different issues when I feel insecure. And I think that's very important as an investor, to have people around you close, that knows you and know what you want, to help you think with you, look at
Mm-hmm.
things from their angle, and then give you that input so that you can then end up making the investment decision. So in that respect, the tools and the skills I learned through the corporate years, they have been very, very, very useful. And I also, working with founders, I have also noticed there's a difference between the ones that have had some time in corporate and those that have not. Because at
Okay.
the end of the day, you can have a good idea
Mm-hmm.
and you can sell it to me. You're a fiery startup
Mm-hmm.
person. You have an idea, you have a
Mm-hmm.
problem you want to solve, you want to save the world.
Mm-hmm.
But at the end of the day, that idea needs to be put in operations. And
Yeah.
there's a day to day, and there's the
Mm-hmm.
boring part. And a lot of founders, well, some of the ones I've met so far, they get stuck at that point. And then
Mm-hmm.
there's another kind of people that need to come into the mix to make it to the next level. Because before you
Mm-hmm.
can scale up, you have to really create a machine that is
Mm-hmm.
efficient. And not all founders can do that. And I have noticed, as I said, the ones that I've come across that have had some experience in corporate, they're better equipped
Mm-hmm.
to do that.
Yeah, that may be more used to, okay, there is milestone, there is tier codes, there is certain checklist that needs to be happening at a certain stage, so they know what is expected of them, maybe.
Exactly, exactly. It's more, there's this structure that some miss don't have, and that makes the transition a little bit difficult. Also in the communication with investors, right? Because we come with another
Yeah.
mindset, with another framework. We want to know what's going on without having to get involved, and
Mm-hmm.
um, and you can even see the way you get the reports back. There are some startups that are
Mm-hmm.
really good at it. They can in one page tell me how things are going, and I'm happy. And then there are others that, oh my god, that I really, I need to call. I need to, hey, can I see the budgets, and
Mm-hmm.
ask the questions. Have you started measuring this kind of matrix, because it's actually important for me as an investor to
Mm-hmm.
know, to be able
Mm-hmm.
to evaluate whether this is going the right way. So yeah, there are a number of skills that people in corporate bring with them when they join a startup or when they start their own,
Mm-hmm.
definitely.
And then coming back again on the people topic, because I guess it's a big part of taking risk and investment. When you need to judge, if this new founder or partner is trustworthy, what do you look for? Like, is it a signal? Because now you say, okay, there's some art skills, like, do they know what I'm looking for? But you're also mentioning like being bubbly, having the passion. So do you have, like, I don't know, the top three signal you are looking for?
People is, it's alpha and omega for to make things happen, right? The investing as a trying to figure out what kind of person this person is. He
Mm,
or she is selling me an idea
mhm,
they passionately believe in, And I am a person that gets also, I almost fall in love with some of them because they are so fantastic, and they're so
Yeah.
well. We've been to some pitch events together.
Yeah.
Um, but what's behind that? I mean, it's the ability. How can I? And that's also a question I ask myself. I need to find out whether this person is able to execute.
Yeah. Yeah.
So not only sell the idea to me or others that don't know
Mm.
the founder, but is it a person that can execute or has people around him or her that can?
Mm-hmm.
If it's a person that walks the talk, if
Mm-hmm.
I can over time observe that this person really, it's not what he's saying, but it's actually what he's doing. So it shows that this person
Mm.
has integrity and has certain skills and abilities, not
Mm-hmm.
only on the product side, but also on the people side. Because investing in property, you're looking at a building of some sort.
Mm.
It's tangible. There's some
Yeah.
numbers. There's some people that rent there, or you can sell it
Yeah.
for a price. There's some
You can make
marketable. There's
some
some
analysis.
exactly. It's a data exercise. But
Yeah.
when you're investing in companies, in startups, it's like hiring somebody. You know that from corporate.
Mm-hmm.
You look at a CV, you interview them, you do personality tests, and in the business angel world, there's something called human due diligence, which is
Mm.
often overseen. It's not something that you do the financial due diligence. You want to
Mm.
know some numbers. You want to do the legal due diligence.
Yeah.
Is this company established in the right way? But the human due diligence, it's mostly like, do I like this person? Is there
Mm.
chemistry, which probably could be at the beginning. But there are some other issues. I've tried that with some startups where we've done some personality tests like you
Mm-hmm.
would do for an employee, and then you find out that perhaps the person is not a team player, or
Ah.
it's more of detail oriented, and is not able to
Mm.
lift up to the helicopter
Yeah.
level, you can
Yeah.
say.
They cannot have a zoom out view,
The uh,
like
the the, the
looking at
strategic
the
is
overall picture.
exactly if they're lacking the strategic part, and they're
Yeah.
sitting as a CEO of an up and coming
Mm.
company, then we have a problem very short after, because
Yeah.
they will not be able to grasp what it takes. They won't be able to get up to a level
Mm.
where they can start making the right decisions, because they are so much into the nuts and bolts
Yeah.
of the machine. So those are things that are very important to know at a very early stage, and that's something you talk to them about. So I have done that. I said, listen, this is how you are. This is the
Mm-hmm.
person you are, and these are your abilities, your skills. So at some point, you will need help in this area or in this area.
Mm-hmm.
Meaning, when we because I come into startups at an early stage as a business
Yeah.
angel, sort of pre-seed or
Okay. Mm-hmm.
pre-seed. And then I'm also in that process with the founders where we talk about, okay, the next round of funding.
Mm.
How are we going to pitch that? Are you going to be the CEO, or do we need to allocate money to hire somebody that can
Mm.
complement the skills of the founder? So that is also something that you need to bring to the table at an early age. But then that requires that you get to know the person,
Yeah.
and you cannot. I mean, it requires more than a conversation or two. So it
Yeah.
takes time. And in the business angel environment, I've noticed that there is always this urgency, because the startups don't have that much money,
Yeah.
and maybe there's somebody else who wants to snatch the best
Mm.
ones.
Okay.
So
Mm-hmm.
an investor could get too eager and come
Mm-hmm.
in too fast, and then later on find out it's like, ooh, I should have,
Mm.
right? But that's part of the risk.
Yeah.
As I said, moving from corporate to property, that's a risk. I'm putting on my own
Mm.
money, but
Yeah.
the data set is there. I can calculate things. I can with certainty see what's going to happen with this investment in the next 5-10 years. But when you move into the venture capital fund, or like I do sometimes business angel investment, then there is there's an element of risk that you need to learn to live with. I have to learn to be comfortable with uncertainty, if you know what I mean.
Yeah, and actually, I wanted to ask you this question because I think it's so relevant what you said, that obviously you have the skills now because you invest your own money. So you have zero safety net. It's like you have to believe and trust and do the work. But like, how do you think that people or leaders can build these skills in the corporate world? Because, sometimes we say, it's a mindset, some are risk takers, some are not. But to be honest, at a certain level, you have to take calculated risks. And it's not your own money. So there is always a safety net somewhere. And I don't know if either you can project from your experience in corporate or also with the founders that you're working with that needs to also develop that. What would be your view on this risk-taking building skills?
Well, taking risk is actually it's a topic in its own right, because it's also men and women, right?
Mm,
Men tend to take
tolerance.
more risks
Mm,
than women were more careful. That's sort of a generalization. And then there is the aspect of risk reward. In
mm-hmm,
principle, the higher the risk, the higher the
mm,
reward, but also the higher the rate of failure.
mm-hmm, mm-hmm,
So you really need to become comfortable with that feeling. And in my case, what I've done is say, okay, I have this pot of money. I would like it to last
mm-hmm.
and grow. I need to put some of it in something that is boring, secure, but I
Safe.
know that it will preserve the value over time.
Mm-hmm,
Call it property, real estate.
mm-hmm,
But then there are some opportunities out there that I don't want to miss.
mm-hmm.
And that's the startup, private equity, venture capital
Yeah.
world. I don't necessarily, and I don't know a lot about
Mm-hmm,
many areas, but I want to have exposure to them because I know there's a
mm-hmm.
lot going on
Yeah.
in different types of tech
Yeah.
areas, in different type of retail areas, in
Mm-hmm,
commodities, what have you, a lot of things. So
mm-hmm.
what my take on investment and wealth management, as you will,
Yeah.
is say, okay, I have divided my like a pyramid, right? I have the base of the pyramid is the safe. It's going to be there. It preserves the value. It's not that liquid, but it's something that over time it will preserve its value. Then I move on to something that is more risky but still under control, which is the
Mm-hmm,
VC funds. I have experts in areas both as putting together financial
mm-hmm,
um, instruments, but also looking at different markets and concepts and stuff. And then I put some money there. And then areas that I'm personally invested in and interested in, either because I
mm-hmm,
know something about it or because I want to learn about
mm-hmm,
that, then I invest directly in companies and become a
mm-hmm,
business angel with the intention of helping out, helping the founder, becoming their mentor, and then contributing to the success of these startups, well knowing that in the theory of investing in startups is that you need to invest in quite large
yeah.
amount
Broader.
of companies to, if you're lucky, one will make it for everything else for you, because the majority of them will
Mm,
go bust.
yeah.
That's sort of the reality of things. So that's also why I've started investing in VC funds, because by
Mm-hmm.
investing in them, then with one investment, I'm
Yeah.
with
You have a broader view.
12, 15 companies already there. Somebody else is looking at that, and then I can pick and choose the 3, 4 that I feel for, that I want to be close with, and then help out there.
Mm.
So yeah.
I think it's a perfect transition to also a question I had on this, the view and the skills that you need to invest and also manage these different asset class? Because now you really explain well, like some are more secured, less risky, then demand more time or less time, and there is some that you handpick that are more rewarding. If I make like a parallel with the corporate side, to extract a bit your learning and share it with some of the aspiring leaders, it's the same in the companies. We have some projects that are running all the time, some are a bit basics, and you have some that are more R&D or new. Just like from your experience doing your portfolio management, what differs? Is it that you allocate special time on some, or how do you manage all of this asset class? Do you have a certain system?
Well, I guess it goes naturally that where the biggest investment is, then that requires the most attention.
Yeah.
Having said that, the startups I invest directly in, they can be quite demanding because I have experienced both sides of the scale. There are some startups that I need to call and say, hey, how's it going? Are you all right? But, I haven't heard from you in a long time.
They're more autonomous.
And I haven't received a report in a long time. And then there is another one. It's like, okay, you're calling me now. It's the third time you call me today. You can make that decision on your own. Can we not keep it to our weekly meeting or our monthly meeting?
Yeah.
So it's this balance, and also the issue of I am an investor, so I don't want to take the responsibility and take the liability of making decisions for a company I have invested in, because I have invested in the founder and the founder's management of this company.
Yeah.
So in terms of, you asked me in terms of corporate and how to draw some parallels there. I remember where I worked at Ericsson here in Denmark many years ago, and then I had my functions. I had to. I was a business manager, and I was responsible of vetting requests of software development from different geographies. So I was always looking at business cases. But at some point, some of our software engineers devised some sort of calculation machine that could be used in some way in also the geographies, but it came centrally. It was like a pet project from software developers, and I got to hear about it, and I thought, that's interesting. There's actually there could be money into this. So within the company, we established a cell, what we call a cell, an innovation cell, and develop this product. And it was a spin-off. It was sold off at some point because it became its own product, and it wasn't part of the core business, which is also fair enough. So that was my first experience, you can say, as an investor. I wasn't investing in it, but I was the representative of the investor, you can say. And in corporate, the main function was the core business, but there was space for this more sort of side projects that gave employees something new, exciting, and see their own ideas come to life. That was also a big part
An
of
incubator.
motivation. Right. Exactly. Yeah.
But it seems you already had that within you. Because you were not doing that, and you were still looking. There is money there. I should really follow this thing. So maybe the question is like, do you have? And I don't know if it's a tips or just an advice of how to create this, investing mindset, or because it helps a lot in decision making. I hear a lot about investment and risk taking also help you with decision making. So how do we create this mindset if we don't have it?
Well, we talked about risk management, and I personally get a lot of inspiration from listening to what's happening in the world. I'm addicted to podcasts about finance and the markets and geopolitics. I also need to be aware of these issues because of my position as consul as
Yeah.
well. So and that gives me a lot of inspiration, because I said, okay, listen, at some point I started hearing about a company that nobody knew about,
Mm.
called Nvidia. It's like, oh, who are
Mm.
they? And they were making chips for the gaming industry. And I have now they are grown-ups, but at the time I had three teenagers playing PlayStation and what have you. And I thought, I wonder if this could be a good investment. And it turned out to be a really good investment.
Amazing. Yes.
Uh, but it's because I was listening. I have this, the world around me sort of inspires me to follow some tracks that I find
Mhm.
interesting, and I'm curious by nature.
Mm.
So I start to sort of dig into it. It's not that I went into Nvidia's,
Mm.
financial reports or anything. I just had a feeling that, okay, well,
Mhm.
if children or young adults,
Mm.
still grown-ups, use so much time playing in their PlayStations or whatever, the small ones, so there must be
Mhm.
something with this company. So it's more about, follow your nose, you can say, in
Mm.
some paths, and have a feeling for the environment around you. So
Yeah.
if you're in a telecoms, delivering, I don't know, internet nowadays. When I
Yeah.
started in telecoms, it was telephoning.
Yeah.
So where was the money at the time? It cost money to call internationally.
Mhm.
So there was a lot of money in arbitrage of international minutes. So
Mhm.
that was a business, and that was a start. There were startups working around that problem that made a
Mhm.
lot of money at the time. They don't exist anymore. But you know what I mean? I mean, it's
Totally.
looking at what are the gaps, what are the issues, what are the problems customers come
Mhm.
with them, and to the company, and then say, okay, could there be an opportunity to make a product? So
Mhm. What I love about it is that you mentioned that afterwards you need the skills to do the math and to do the data, but sometimes we feel that only the M&A people can invest. But what I love with your explanation, and I totally believe it, is that you basically need to be a bit more curious and understand more what is it around you to actually find the right investment, and then after you do the spreadsheet. And I think this is super also relevant for your path in real estate, because you can always do the maths, but you also need to have a bit of a feeling of also what is a good place to invest. Sometimes you feel that on the paper is good, but then you also need to have a bit of this feeling part. Is it actually a good investment? Because maybe you could have it cheaper for something that is amazing.
yeah. But I have, I call them colleagues. There are other investors in my network that, they've had a long career in corporate, in pharma, for example,
Hmm.
and their senses for spotting good, prospects, good, businesses, is just so sharp. They're so good.
Okay.
So sometimes I come across some, medical devices, or some
Mm.
some med tech or whatever,
Yeah,
that I
medtech.
don't know so much about, but I have, my networks people that do. So I come and say, hey, can we look at this together?
Mm.
And there's been a couple of cases where I have, yeah, my colleague ended investing in it because it was a really good prospect. I didn't, because it is so, it's so, I don't, if I don't understand it, I don't
Yeah,
invest in it.
if it's too
So
far away from what you know,
yes,
too much risks.
yeah, it
Second.
it becomes too risky, and then the risk becomes kind of stupid, because I don't understand it. The risk
Yeah.
was always there, but because I don't understand the matter of the
Mm.
thing. So, but I'm
Mm.
happy to have brought some prospects to my colleagues, and they do the same with me. If they
Yeah.
see, they know now what kind of things I invest in. If they see something, it's like, oh, that could be something that interests Larissa. So, so so
Yeah.
so I get to see that. So there is also something about telling the world
Mm.
what your interests are,
Hmm.
getting in, inputs from every day, podcasts, newspapers,
Hmm.
And nowadays it's becoming quite easy. The flow of information is it's amazing. And what we're doing here, sharing our experiences, inspires a lot of people as well. So yeah,
Yeah,
that's
totally. Also an addict of podcasts is why I have one. So, totally follow you there.
yeah.
I think we're already slowly gonna go to a portfolio, it seems. So maybe we can close the part one here, and then we will enter in part two about like what leaders can learn about building global portfolio. Also, I know you're very good at like networking and all having these skills, what we can learn from your path. So thank you so much, Larissa, for being with us in part one, and I see you in part two.
Welcome.